There are some new ones as well, as you pointed out, especially from the global arena. So, it's starting to hurt. And it has actually, to be fair, been hurting portfolios for a while now. Because, while the graphic will come up, which shows you how much we are down from the highs for the Nifty Bank, for the mid and the small cap part of the market. 13%, right, can live with it. But the point is, the broader market, stocks and one's portfolios are down between 30 and 40%. This is, of course, just the indices. Nifty Bank is down 12. Midcap index as of today's close from the highs is down 15. Small cap index is down about 17%. Actually, for the mid and small cap part of the market, losses have accelerated over the last 10 days or so. They were at par with how much the Nifty or the Nifty Bank was down. These are sort of sectoral sort of cuts that we've seen. PSU Bank index is down 24% from the highs now. Again, CPSE is down 24%. Which basically means an index is down, has lost about 1/4% of value, which means stocks are down, 40, 50% in some cases. Oil and gas, 25%. You've got the metal index, which is down about 21%. Auto, real estate, FMCG are some of the others. And this is the part. Real estate companies, and real estate is especially important because, it connects to so many other things in the economy. Many real estate companies are starting to talk about the fact that whether the urban slowdown that we are seeing will start to actually impact home sales. We had Abhishek Lodha with us earlier this morning actually sort of talking about it. Said so far they're not seeing any slowdown, but it's something to sort of be cognizant of. Now, as I said, just a combination of some of the older worries and of course some new ones at the margin as well, high valuations. Just to give you an example, the median PE multiple of NSE 500 companies is around 40 times. Now, that's the median. And if you take out some of the lower price, cheaper companies, actually this number goes up, jumps higher. You can always argue and say that high P multiples are not a new phenomenon. It's been there, has been around for almost a decade now. This big step up in valuations, P multiples that we've seen. But I think this is something which I think comes to bite when markets look a little vulnerable. Of course, single digit FY25 EPS growth is what we're looking at now because the slowdown started in the second quarter. There were some hopes that Q3 will be better, but I don't think it's panning out that way, which means that the full year FY25 number is basically going to leave us with somewhere around 9-10% kind of growth. And then, which means that FY26 earnings growth estimates will also need to be brought lower over the next one quarter or so. Tight liquidity has been, of course, has been spoken about quite a bit. And now I think it's the clamor is rising from market participants saying that some relief is needed. And some, lots of sell-side mainstream economists are also starting to say that actually, we need to see some action on that particular front. On the fiscal side, of course, the union budget is in front of us on Saturday, the 1st of February. Will the government acknowledge the slowdown with some measures, and what can they do? I think those are important questions as well. And of course, the new worry at the margin, and this is the new one, right? Because the question is this: will China's DeepSeek startup and the product that they've launched call into question the billions being spent on AI capex on companies like NVIDIA, etc., which has basically been singularly responsible for this big, huge up move in U.S. market? So, and that's a new thing which has been thrown into the mix, and which has kind of complicated matters. I would have said that given the correction that we've already had, markets perhaps were at a point where we at least start to see a bit of a bounce. But with the fact that the last point that I mentioned with regards to global markets with this DeepSeek thing, I think we are still in wait and watch mode, whether that will really cause damage or it's something which will actually pass over and US markets actually will be really unhurt in the larger scheme of things. So I think lots of things to track. It's a bit of a flux out there, but I think one thing absolutely clear: portfolios hurting out there.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube.
Well, thanks so much for tuning in to CNBC TV 18. Make sure you follow us and stay updated on all our social media platforms.